Monitoring, reporting, and verification form the backbone of credible carbon markets. People often shorten this to MRV. However, clients frequently misunderstand what these three letters represent. To operate effectively as a climate consultant, you must define these three terms as separate activities. Each activity has its own distinct actor, output, and timing. You cannot treat them as a single process. You must explain each step clearly to your clients. This helps them understand how carbon credits are created and verified. When you separate these activities, you build trust in the data. You also ensure that projects follow the correct rules. Let us break down each part of MRV. We will look at who does the work, what they produce, and when they do it. Let us start with monitoring. Monitoring is the systematic collection of data over time. The actor responsible for monitoring is the project operator or proponent. They run the project on the ground. The output of monitoring is primary data. This is the raw information collected directly from the project site. The timing of monitoring is continuous. It can also happen at specific intervals throughout the project's operational life. Monitoring does not happen just once. It is an ongoing task that tracks real-world conditions. The governing document tells you exactly what to monitor and how often. You must follow these rules closely to ensure the data is valid. Next is reporting. Reporting is the compilation and documentation of monitored data into a structured format. The actor for reporting is the project proponent. They are often supported by a consultant like you. The output of reporting is a monitoring report. This report organizes the raw data so others can understand it. The timing of reporting is dictated by the governing document. Usually, this happens annually. It can also happen at the end of a crediting period. The report must follow a strict template. It must show all calculations clearly. Your job is to make sure the report is accurate and complete. Good reporting makes the next step much easier. The final step is verification. Verification is the independent assessment of the monitoring report. The verifier checks the report against the requirements of the governing document. The actor here is an independent third-party verifier. They do not work for the project developer. The output of verification is a verification statement. This statement says whether the data is correct. The timing of verification occurs after the report is submitted. It must happen before any carbon credits are issued. The verifier acts as a gatekeeper. They protect the integrity of the carbon market. They will ask for evidence to prove every number in the report. Only a clean verification statement leads to issued credits. Clients routinely confuse MRV with several adjacent concepts. You must separate MRV from monitoring and evaluation. People often shorten this to M, and E assesses broader project outcomes and development impacts. In contrast, MRV strictly quantifies greenhouse gas emission reductions or removals. MRV is also distinct from greenhouse gas accounting. Accounting is the overarching framework for quantifying emissions. MRV is the procedural system that proves the accounting has been executed correctly. You use accounting to set the rules. You use MRV to show you followed the rules. If a client asks for MRV, make sure they do not actually want an M and E report. Clearing up this confusion early saves time and money. Do not confuse MRV with transparency reporting either. Under the UNFCCC Enhanced Transparency Framework, parties to the Paris Agreement submit biennial transparency reports. We call these BTRs. They submit them every 2 years. The first BTR was due on the 31st of December 2024. A BTR covers the National Inventory Report. It also covers progress towards the nationally determined contribution. It includes policies, climate change impacts, adaptation, and support. While a consultant might support a BTR, it is not a project-level MRV system. It is a sovereign compliance requirement. A country produces a BTR. A project produces MRV data. You must explain this difference to clients who work across both levels. You must also separate MRV from validation, assurance, audit, evaluation, and regulatory review. Validation is the ex-ante assessment of a project design before implementation. Verification, on the other hand, is the ex-post assessment of results. Assurance and audit are broader financial and compliance terms. They may overlap with verification, but they carry different legal implications. Regulatory review is a governmental assessment of compliance with domestic law. The critical rule to remember is this: the label does not determine the procedure. The governing document determines the procedure. If a client asks for MRV, you cannot proceed based on the acronym alone. You must identify the governing document. The specific rules are found only in that document. Consider the Article 6.4 Paris Agreement Crediting Mechanism, or PACM. The first PACM methodology entered into force on its adoption on the 30th of October. It is valid for 5 years unless revised or withdrawn. It is the first methodology to set out how baseline alignment with the Paris Agreement works in practice. Existing projects transition to the PACM methodology for all vintages from 2026 onwards. An interim registry launched in early 2026 while permanent infrastructure is completed. This rulebook change forces an MRV system to be entirely respecified. The consultant must read the new PACM methodology. You must understand the new monitoring parameters. You cannot assume the old procedures still apply. Within the letter M, there is a crucial distinction you must write down. M can mean monitoring, which is the tracking of parameters over time, or it can mean measurement, which is the direct physical quantification of a parameter. The governing document dictates which applies. You must record this in your MRV plan. To show this difference, consider a real example from the gold standard metered cookstove approach. In many traditional cookstove projects, emission reductions are estimated using an estimated indicator. Project developers conduct surveys. They ask households how much fuel they used before and after receiving the new stove. The data is based on human recall and estimation. In contrast, the gold standard metered methodology approach uses a metered indicator. Sensors are installed on the stoves to record actual usage. Emission reductions are computed from measured cooking events rather than estimated from surveys. This is the clearest real illustration of the difference between an estimated indicator and a metered indicator. As a consultant, you must describe the mechanic of how the data is acquired, but you must never state the methodology's numeric parameters or version from memory. You must always consult the primary source document for the exact equations and thresholds. This keeps your work accurate and defensible during verification. Using the wrong number can cause the verifier to reject the entire project. Always check the document first. As MRV systems evolve, digital MRV, known as dMRV, is replacing manual steps with technology. dMRV combines satellite imagery, artificial intelligence, Internet of Things sensors, and distributed ledger records. It collects, processes, and verifies data with far less manual handling. The digital workflow runs in 6 steps. These are data capture, standardization, quality control, calculation, independent verification, and registry issuance. There is no manual re-entry between steps. It maintains continuous audit logs. Verifiers review structured data rather than reconstructing scattered records. The World Bank produced a technical guidance note on standardizing digital MRV. It includes evaluation criteria for assessing system performance. Vera, Gold Standard, and ACR increasingly accept these digital data pipelines, particularly for removals. However, technology categories have documented failure modes. Sensor drift and calibration loss can ruin good data. Cloud cover and resolution limits affect optical remote sensing. Silent failure in automated data pipelines can hide missing data. An immutable ledger entry of a wrong number is still wrong. You must teach the technology category and its limits. Never name a commercial dMRV vendor as an example of good practice. Vendor performance claims are rarely independently verified. Your role is to decode the governing document and define the exact requirements. Ensure your client understands what data is required, who produces it, and when it is delivered. For your task, produce a 1-page MRV definition matrix for a selected governing document. State whether the M requires monitoring or measurement. Identify the actors, outputs, and timing for each of the 3 MRV components. List 3 adjacent concepts from which this specific MRV process must be separated. This matrix will keep your project aligned with the rules from start to finish.